Well, g'day folks, it's Matt Hayson here with our final wrap for 2024, and what a year it's been with plenty of ups for the property market. But also, as we draw the curtain to close the year, it's reasonable to suggest now we're seeing some downward pressure on property values. Now, as we move into December, we're also seeing some evidence of what we call buyer fatigue creeping into the market, not uncommon at this time of year. And with no rate cut in the immediate future, buyers do feel very comfortable that the trading conditions that they're currently seeing, they're likely to remain in place at least for the next few months. So that's what's kind of keeping them on the sidelines a little bit. That said, the auction market is continuing to pump. Last week, 1,424 properties went under the hammer for an overall clearance rate sitting at just 46.1%. Now, the Sydney Morning Herald reported this was the weakest auction clearance rate for the year, and we can tell you it actually wasn't. And also within that article headline, it noted that sellers were losing confidence. But in our view, it's really the buy energy which has really noticeably dropped away, and that's having the most impact on the market at the present time. However, over the November quarter, what we did see was Sydney values have marginally fallen just by 0.3%. That trend line's very evident now, and it's buyers who are acutely aware of how this market is closing out the year, and it's sellers who are having to adjust their expectations around price in order to secure a deal before Christmas. Now, it's interest rates though that remain a huge conversation in the market, and this week, Andrew Lilly, who's a strategist from Barrenjoey, suggested the RBA will cut rates sooner than many may think. Now, Mr. Lilly noted their internal measurement of core inflation are falling, and if this trend continues, he believes that rates will be cut in February, regardless of the RBA's tough talking rhetoric. Now, to temper this, of course, and this commentary, which is very typical of media headlines right now, there is always the opposing view, and this week it was ANZ, AMP, and also the Bank of Queensland, who are all forecasting that rate cuts won't kick in until May next year. Now, speaking of conflicting forecasts, it's Reuters' analysis this week is suggesting that Aussie home prices are going to steadily increase over the next 2 years. Now, pushing these prices will be the lower supply and falling interest rates, which is really going to drive demand. However, our locally based CoreLogic are suggesting that even with rate cuts, this isn't going to drive property prices. In fact, investment advisory firm Performance Property suggests that Sydney housing market is on the brink of a 15% price correction. Now, I'd be very surprised if that does unfold, but as always, there's always plenty of data, conflicting opinions unfolding around the property market. But this week, it's the Westpac Melbourne Institute Time to Buy Property, which we had a look at, and that is modestly lifting. And this is where we sense the market is currently sitting, and it's likely to move into in January, where price and value are going to remain very vital for the market. Now, buyers are going to pick apart their chosen market, and they continue to purchase with confidence when they do see that value. But it's going to be sellers who are going to have to remain nimble, listen to feedback, and adjust their expectations through the course of the campaign in order to secure a sale. So that's what's happening in and around the market. As we close off 2024, it's been a wonderful experience sharing all of our insights with you through the course of this year, and we're going to be back dedicated to doing the same next year. Thanks very much for watching. Have a great, safe family break over the summer holidays and a wonderful Christmas, and we'll catch you all next year.